Alternative real estate assets present premium investment opportunities in Canada. For insight into options for investors on where to place their capital, from Colliers, we're joined by Emeka Mayes and Ayesha Shafiq. Ayesha, how do you define alternative real estate assets, and can you give us a few examples?
So the way I define alternative real estate assets is essentially any sort of an operational business that has real estate behind its key infrastructure. So meaning student housing, seniors housing, as of late data centers is probably something that you guys have heard a lot more about as well. Life sciences, anything in the sphere where the real estate itself is pushing the operational business.
What are some of the advantages to investing in alternative real estate assets?
One of the key advantages would be diversification, because it's outside of the sphere of traditional real estate and how it's defined. And secondly would be, typically it tends to be a little bit more higher yielding because it's still a sphere that's not as explored in terms of how the real estate actually works. So anything when I speak about data centers or life sciences, these are fields that are still being really studied and capital still flowing into them, so it's still a bit higher yielding.
What's changed the last few years to make alternative real estate assets more popular?
For example, organizations, when they had to make sure that their workforce was working from home, what they needed to do is have infrastructure in place to support this, meaning data centers. Then everyone's starting to talk about data centers all of a sudden and how we can acquire them and make sure that if we go through another sort of similar situation in the future, how we can keep business rolling right off the bat versus having to scramble and figure out how we're going to get our organization back up to speed again.
What are some of the different ways of investing in alternative assets, and what kind of investors are we talking about?
You can invest in alternative assets the way you would any other sort of a real estate asset, meaning you can buy it directly if you've got the capital to do it. You can go into a joint venture partnership of sorts, so where you go in with an operational partner or an actual real estate partner themselves too. And finally, you can invest in REITs or platforms that offer real estate as exposure to them. So from the types of investors that are looking at it, you're looking from retail, private, institutional, across the sphere, everyone's looking at the alternative investment sphere.
What are the keys to managing risk and finding the right investment in a sector that's become quite popular?
I think the best way to go about it is just like how you do any other market or product type. It's really spend your time, understand the market, study it, and then if you're a new entrant, pick the right partner. So take your time. Real estate is really a relationship business, and I think the best way to really feel safe and secure is to spend some time, build the relationships, and then invest either in a platform or with a partner that you can trust. A platform is somebody who's got a bunch of existing assets either in a particular market or across Canada, and they're looking for a capital partner to inject some capital into the business.
Which sectors are seeing the most capital flowing to them, and why?
Within real estate itself, what we're seeing is capital flowing towards multifamily as well as logistics space. But within the alternative investment sphere, what we're seeing is more money flowing towards data centers as well as life sciences. So a lot of the groups that are looking for stable returns and have conviction behind the actual infrastructure behind the real estate are focused on where they think the operational businesses are going to thrive in the future.
One thing for sure that I need to highlight is that global capital is back, and the flows of capital, whether it's domestic or cross-border, we're seeing it in all asset types, but in particular as it relates to alternative assets. And that's because they're looking for some juicier yields, especially in an environment that we are today where we're seeing some winds around inflation, about increasing interest rates. Alternatives is more and more becoming an interesting place to invest. Globally, when I speak to my partners, I'd say the top three are more or less the same. The ranking changes, but it seems to be, it's data centers, life science, student housing, affordable housing, senior housing, and the order of that changes depending on what market you're in.
We're seeing significant foreign capital flow into Canadian alternative real estate assets. What are some of the reasons for that?
The top reasons is, one, it's a very mature market, so people are very, very knowledgeable. They know what they're talking about. They've also got an established platform with a proven track record. Overwhelmingly, the response is that capital is looking to come to Canada, whether they've come here in the past and stopped or new entrants coming. The spotlight's definitely on us, and the reason is it's safe politically, it's reliable, and we've got a proven track record.